Oh, sorry, my mic is muted. What's up? What's up? Sorry, my mic was muted there. What's up, everybody? Good morning. Nvidia earnings. Zoom call, folks. Can you hear me? YouTube folks, can you hear me? Nvidia earnings today. Yep. I asked you guys, and y'all said y'all like the stream without the music. So what I did is I'm turning music off going forward. I'm gonna listen to music, but you guys can listen to your own music because I think that's better. Although it was quiet in here. So I have to turn music on, but make it to where it doesn't come to the stream. That way you guys can just hang out and chill. Because it's like, I'm tired of dealing with the copyright stuff. No copyright. Is this copyright? And having music playing in the background. People are making these like AI mixes and stuff. So it's like original music. And AI can just write music for you. But you know what I want to do? I want to listen to like heavy jams and some metal and some like good stuff that I like to jam to. And I'm just going to like, I'm just going to do that. And that way I can just listen to whatever music I want to listen to. So, well, all right, let's get ready to get started. Nvidia earnings after market today. It's going to be pretty big for that. You know, and honestly, my forecast is that the market's going to actually trade down. I know I don't normally do this, and I don't call it a bear market. It's not a bear market at all. But we will likely see 1 to 2 months of selling after this event that we had in late July. I'm almost convinced. I'm going to make some big options trades probably in the next week or two. In the next week or two, I'm going to actually play the market like I'm going to pivot it 4 different times. I'll talk about my trade that I'm going to do. I did this in October of 2022. Very, very rarely do I jump in the options world unless I just want to swing some really big positions with some big money. So that's what I'm going to do. I'm already set up to do it. Take note today that we have 2 different yellow lines, 19,667, 5641. These are resistance points. So if we're trading below here, they're going to be resistance. Now, it's hard to think that we would sell off again a second day in a row like this. If you do, you would get a much lower low. So I think today we still drift up. Nothing on the earnings calendar. Nothing on the investment calendar today. There's really, Fed members speaking towards the end of the day. This week is really light. I would say GDP is Thursday. That's the big one. Yeah. No, actually, no. I'm sorry. I'm today is actually heavier. Let me look back. I was looking at the wrong week. This week is pretty heavy. So news-wise, we have some pretty big stuff. The GDP numbers are going to come out for quarter 2. That's always a big move. And then the initial jobless claims always come out Thursday morning. And then the continuing jobs claims. We're going to get health of the job market at that time. We'll see what we get. Don't forget Nvidia earnings today. Do you guys enjoy the YouTube stream? Because I have some news. We're going to be shifting to Zoom, maybe somewhat permanently for the day trading portion of the stream. So fortunately, it might come to a point where you guys can only watch me if you watch us on the Zoom calls. because the channel that we're gonna have for the streaming channel is gonna feature other people and not just myself. So I'm gonna still do the live trading every morning, but it's probably just gonna be through Zoom. And our channel is gonna feature me sometimes, but it's gonna be like we're gonna feature all the vendors on the marketplace once you get this up and rolling. So let's just keep that in mind. I'll have like live trading with Matt like is one of the segments, but it's not going to be like a daily thing anymore. And the Zoom calls will be recorded and everything, so. Friends, don't forget to smash that like button while we get ready to get going. 15 minutes of market opens. Let's do our pre-market. We get NVIDIA monthly maps here. Pretty interesting to see that over the next 2 weeks, NVIDIA has this resistance kind of like still sitting here. These little light gray areas. I'm in a boat now, despite if earnings are crazy or not. Earnings just kick us out and just throw all this out of the water. But pretend that earnings aren't happening. NVIDIA starts to experience a little bit of selling over the next week or two. And this is volatility when the spaces get bigger, right? So I'm in a boat that we might have a week of this in the market and then like a couple of months of this. That's what we call the flash crash scenario. You have when the market's just trading along, then like does what it did a couple weeks ago and then recovers like this. Typically, these kind of markets don't do that. They don't just keep going. Typically, what they do is they spend a lot of time testing a lot of stuff, and more often than not, they could slowly like start to lower, just slowly. Like people sold, and then the market recovered, and then they sell the rest of what they have against the bull buying, and then ultimately it rallies. So there's a possible scenario that what I call the market never forgets a crash kind of thing. Top consolidation, maybe a week or two up here, maybe a month or so, and then a month or two down and then back up. So basically, like my target for rally was usually September that we bottom out. Unless Nvidia earnings come out stellar and then the market just keeps going, we'll probably be November, December when the big move is happening, the breakouts, January. Could be then. Did I start the class already, Sergio? Yeah, we did. We started the class. Let me give you guys the link to that. We're already 2 sessions in, and let me tell you, if you guys have been to the class, how you guys are liking it. Everybody right here, I don't know if you guys can see the Zoom chat. People are saying Zoom is way better. They love it on Zoom. That's cool. Awesome. Zoom is better. Class is awesome. Epic. Zoom is way better. Zoom is better. Oh, you guys are saying. Okay, cool. I know Zoom is so much better. And, okay, let me get some. Somebody says pays for itself in seconds. There's no delay. There you go. So yeah, so let's go ahead and do the pre-market stuff. Let's get ready to get going. Okay, what are you gonna do first? Some information here. Okay, we're gonna do Okay, let me get the link to the Zoom call thing here. Like I tell you, we're transitioning the business over, so I want you guys to all, if you guys can support what we're doing here. We're trying to raise money so we can hire more folks, more developers. I mean, our team is big enough as it is, but we're opening up a new package for everybody to join so that we can support the group. And we're transitioning everybody over there. Classes are recorded. There it is. It's $1 a day. Literally $1 a day. Okay, so we're gonna do first. Go to your Discord, everybody. This is kind of like the first step you do every morning, pre-market. You guys go here. You go to bots and indicators. You go to futures, hedge pressure dynamic, and you grab the last table, the last print of the table, the ones at the bottom. I'm gonna take those numbers and draw them on my screen. Okay. So right now I got the S&P futures up. Let's go ahead and just kind of zoom out here. The yellow line is permanent, 56.41. That's there. This is the major pivot for today. 56.32. Put a line right here. We have 56.02. Put a line right here. Okay, so it's still that kind of upward pressure. There's going to be pivoting between here. Look at NASDAQ. This is just pre-market setups. These are our futures pivots. We do this every morning. Futures, 19,699. $575. These are at the same spot. Keep up and about. Friends on YouTube, don't forget to hit that like button. Give it a smash. For the Zoom call, I need to find a way to get the other screens in here. I need to share my encoder through Zoom. I'll figure out a way to do that. Instead of just being a webcam. I'll have to figure that out. So you guys can see other screens. So just keep in mind right here, VIX trading below triple V, which is good. We want to see this for the month for our continuing bullishness. But be careful that NVIDIA earnings don't just like kick us up here in case the market does tank. If we get through NVIDIA earnings and things are nice and clean and we stay below 1605, I'll give you the number on YouTube. All right, everyone here, YouTube, hit the like button. Thumbs up below the screen. If you like what we do here, hit that thumbs up. Hey, love you guys. Love you, chat. 1605. All right, let me double check things. My email inbox here. All right. Awesome, awesome. Good morning. Wow, we're almost at the halfway point for our Zoom call drive. We have for the new webinar session, we have 100 people, 150 people signed up. Right, we're just about there. Our goal is to get to 300. So what we're gonna do, this is gonna be a little controversial, but I'm gonna probably stop streaming on YouTube altogether. Everyone, I want you all going to Zoom. If y'all like the show that we do, I'll probably stop streaming on YouTube until we get to 300 people in the Zoom call. So I want everybody to sign up for it. It's $1 a day. That's it. We need to do revenue drive. We're gonna hire 2 new developers and we're gonna build tools in the platform. With that, what we're gonna build is the probabilistic backtest. Are gonna show the probabilities of each setup on the chart. We need 2 dedicated employees to do that. So we need 300 people. We'd love for you guys to sign up. It's $20 a month. That's it. If you guys are on the legacy site, send me a DM. I can show you how you can go over to the new site without having to worry about using legacy anymore. You can use all the new features. Don't wait for us to kind of convert you over. And that's what most people are doing. Most people are canceling their old membership and getting into the new one, preserving their old price. So send me a DM. Easiest way to do that. All right, let's go here. All right, market get open here. We've got 1 minute till market goes. Okay. Let's get EP straight up. All right, let's get our liquidity maps going here. Right at yellow line. So pushing a little higher at the open. Positive resiliences. Looking good. Looking good. Mean reversions. Okay, interesting. All right, so NASDAQ. Big range here. Okay. S&P decent ups here in this bull long up. Hedge pressure 561 touch. So this is the support. Yeah, this is the top day. There's really not much predictable movement. This is gonna be a slow moving day. VIX is upward. Probability of VIX moving upward is higher. We have a bull long up VIX, so bear long up. So volatility possibly going higher. But I don't see any sell-off today. No selling today. NASDAQ has a hard limit at 477.5. I think that's the issue. So liquidity maps today, you guys. S&P, for the most part, bullish-ish. NASDAQ, bullish-ish with a limit. You have mean reverting pressure here and here. You also have resistance here. If we break on earnings, then that's big ups to DD band. So NASDAQ's the only one that has kind of like that resistance in that area right here. And the only time I ever do short is I short off of MHP every time in a bear market. Now I look at MHP resilience to kind of like let me know if I think it's going to break or not. And with it being so positive, I'm usually in the boat that it does. That it does break. So I'm not usually going to short against monthly hedge pressure if the yellow number is really good. S&P same boat. Just kind of that pressure right there. And now hedge pressure breaks are usually a short setup. So if today, with Nvidia earnings, I have a hard time believing the market's going to make some big leaps today. But if it does, it does. 561 break is the short setup for those. And I don't usually take hedge breaks to the south side. So if we break that and just travel lower, I usually get out of the way. I usually always buy hedge pressure bounces though with a really small position. Now, there's a couple things I'd like to do. I'd like to see the market move a little lower in general, because my greater market understanding. This is not tradable today from here. There's nothing to do from here. When we get lower to here, I'm going to make a decision at this 561 level. Yeah, not really too tradable. So we changed our timeout response on S&P. So the monthly map should come in pretty solid, like super quick now. Let's analyze this. This is very important to find out what the rest of the market's going to do. I think mine's still sitting on. Hold on. Let's do Nvidia first. Okay, so there's the bull tap right there in the S&P. I am deciding, do I want to take it on the long side? I usually trade these just really small with one contract, just one. Again, I trade very small in hedge pressure taps no matter what. This is a BLU setup. I'll put a 1 on it, just something small. So I'm long right now for the scalp up. Resilience is negative though, so there's really not a lot of room. The problem is on this one, there's not a lot of room to move to the upside. All right, let's do Nvidia monthly map really quick while we're sitting here. It's about 4 or 5 points. I might go to 45 and tap. So this is a $400 to $500 win, $400 to $500 loss. Almost in a 1-to-1 sense. Nvidia has a little bit of volatility building into it. Nvidia is trading in bull zone for the next 2 weeks, and then it has bear zone after that. So Nvidia has a very strong illiquidity pocket over the next 3 weeks, which means there's some possible big range moves in Nvidia, which means this is the range. If you guys want to know a trick, that's about how big up or down earnings will take this. So there's your range on Nvidia. Typically, when you see illiquidity pockets baked in now, that's hedging like a month out for what can happen now. So what I want the market to do is sell a little bit and pull back. That'd be great if it does that. Because I'm about to do some options trades to pivot the market in a certain way. And I want the market to pull back. This is all I want to see happening. We'll talk about the S&P monthly maps. I'm back in the boat that we're not going to get a strong trade higher from here unless Nvidia earnings just nuke the landscape. But I'm in the boat that we spend a week doing this, a week up there, and then we start to trade lower inside of here very slowly, like this. And then from here, the question is, do we go up or do we go down? Now, I don't think the market's going to crash at all, but I think that there are some issues that the market needs to work out first. I'll tell you from all my experience, I'll give you guys a trick. Now, again, it's not trading advice, but let me tell you something. I'm going to give you a really cool trick. I'll give you the flash crash example. When markets just completely are like nice and bullish and they just all of a sudden rapidly crash, they tend to not forget that. A lot of times whoever sold enough to trigger this is going to sell in stages. And ultimately you can get a second leg down or a repeat leg down. So in this mode, there's a rule that I teach, and it's called markets never forget crashes. Typically a crash has a second attempt at selling. I mean, you just get like this like reverberal noise that comes from markets selling off. Here's an example here. This is before the big stock market collapse in 2008, but big quickie crash, retrace the highs, and typically it V's right back up, and then it it slowly trades its way down. This is pretty normal. So this is a 2 to 3 month thing. But what I do think is that if we do have a 2 to 3 month thing, we don't go down. It rallies forever from there. So if you're at a pattern, you know, this is like 2 weeks ago, and then like we're back up to the top, the market's going to spend like 2-3 weeks crawling a little higher, filling the gap, whatever. And then we're going to immediately retrace and come down. This move is almost what I want to see. And down here, I'm going to buy calls. And down here, I'm going to buy calls. And then wherever it rallies, I'm going to buy calls for the breakout. So I know that this is what I've been planning for a while, for a couple of years. Big last options trade I made thousands % on a lot of these trades I did. Was here. When the market was collapsing down in here, I grabbed options trades that were like 2 months out, and I traded that leg up. One of the best trades I ever made in my life. And right now I'm waiting for the same thing. So I'm looking for this leg right here. This leg right here. And the V is like a week, the last week of the month. And we talked about this in the Zoom call. For those of you that missed out, I'm not going to tell you much more, but in the Zoom call, I'm detailing this almost on a daily basis. And from here, it's questionable what happens. You either take a 2 or 3 month leg down and then you rally forever. It's going to depend on what happens after the election. Or from here, you start to press and keep going. So the market about mid-November, right around the election, is going to take its big pivot one way or the other. This is what I'm betting on. Somebody in Zoom is asking me about my trade strategy. I'll reveal it in the Zoom calls. This is going to be what I'm going to call my $1 million trades. I'm going to talk about it in my Zoom calls. So if you guys join the Zoom call program, I'll talk about my trade there. They're pivoting away from the YouTube the YouTube format for all the live trading and coaching. I'm going to do all my stuff in the Zoom call for those kind of trades. What's up, Dom? What's up, guys? Oh, I'm sorry. There's the 5 points I'm looking to get on the S&P. Let's look at QQQ really quick as well. So the monthly maps are very interesting, and you still see this like speckled in bear zone. This is that resistance I'm talking about through October. It's still kind of there. So Nasdaq's going to have a hard time breaking out of this range, breaking through, filling that gap. So in here, this is just a really solid resistance that we're dealing with. Dom, hello, Sarah, man. You know how excited you were to come back and watch me live? Well, awesome, man. Love it. Yeah, we're shifting the marketplace focus over to like the YouTube channel is going to be mostly focused on us like showcasing other people and doing like a stock market show kind of, but the live trading is going to be only in Zoom going forward. Bartender hate it when the move is made after hours. The next day it's flat again and screwed options at both ends. Hate it. Totally hate it. Shit, I even missed my exit here. I wasn't even paying attention. It did move the 5 points, didn't it? Oops. Okay, so SPY still has this kind of resistance here. Oh, my chair looks feels like a little low. Ooh. See, like I'm telling you guys, I'm gonna do what I'm gonna call my $1 million trade. If I nail like all 4 of these pivots, and it's highly specific, and get lucky, I'll make a legendary trade. So you see in here, this is illiquidity pocket. So SPY still has this, and this is actually new. This formed about a week ago. All right, so when you have bear zone of a bull zone is very illiquid. Volatility is very possible. And since we're on that cusp of we're at that cusp on the VIX, being like right on the edge of this triple V. The minute we press against it, it's just going to be a bad month. So this may not be the month where you wake up and like, you know, spring comes early. So depending on the outcome of Nvidia earnings, I don't think the SPY goes any higher than this before it starts to hit that resistance and start to find that volatility. And I do think that this leg is very appropriate. I don't know if we fill the gap down here, but I know we at least likely on that downside will test the open. So there's that hedge break right there. I always trade hedge pressure like it's going to bounce on the long side, and I always trade it small. This is something we talk about in the Zoom calls, and the Zoom calls are all about my secret positioning sizing tricks. We don't really talk about it on YouTube. Most of YouTube is like, you guys just watch me trade. But I have a system for everything. There's a reason I just put one contract and told you guys I'm going to be up or down. No more than 500 bucks. Very planned. Like I know exactly what I'm doing on this one. This is it. I don't think we fill this gap yet. I think it tries to do that. I think this, and this are predictable legs to a degree. This is 2 weeks. 2 to 3 weeks. Pivots down 2 more weeks. Pivots up 2 more weeks. 2 weeks, 2 weeks, 2 weeks. So this is about 2 months. Almost 2 months. This move is probably not going to pan out with a really big probability of a big move up. I think I slept accidentally on this. This was the trade I was trying to make, and I wasn't even paying attention because I had the other screen in front of it. But I was like, I'm going to get that 5-point move. So I'm just going to hold on to it for the. This is not betting on any big movement today. I was actually trading from here to there. That was the trade, and I somehow wasn't even paying attention. I was looking at the wrong screen. Nasdaq plunging below. So today's not a day where we're gonna get big long up. By the way, not like a big long position to the upside. So I said I'm gonna be up or down maybe 500 bucks. I just put a long just because I always long. At hedge pressure, I take a 1-point stop. So. So this is just to do something. There's not really, I don't have much faith in this the setup for today. So what I'm actually planning on doing is I'm hoping that the market actually does pull back. I'm looking for like a 1-to-1 trade, 5 to 10 points on each side. I just put one, like nothing. It's like $300 to $500 either way. Dude, I'm super excited that we've had 150 people sign up so far for this webinar. We're day 2 in. We're going to be, it's called the 20 Days Profitability Mindset. It's a statistical study in how you're supposed to bet in the market. By far, it's the trick to being profitable as a trader is not getting the market right. It's not guessing the market right. It's not guessing up or down. It's the way that you bet. It's knowing that you're going to chop around and just throw one contract at it. Why to do one instead of 10? So I could be $300, $500. My risk is a certain way. I'm bet a certain way. That is really how you become good at this. It's not picking the market direction. Nobody can pick the market direction ever. Market direction is pretty static risk, which is it's random. That's the one thing about market direction. It's 100% predictable that it's going to be random. There are times where the market direction is lined up one way or the other, but you still can't predict that ever happening. It's the combination of what people do is random. So what you do know is that the odds kind of become more favorable under certain circumstances, so I bet bigger. But I always take the same bets every time. And this course that we teach, we're on day 2 of 20. It's a 20-day thing, but we're going to Zoom call every day. It's 20 days of new content. And this is something we never taught before because I never really taught my betting strategy. It's something I always kind of kept secret to myself. We teach you guys some generic rules on how to bet. But in reality, nobody that's really good at trading is going to spill all their secrets, especially for free. They usually tend to keep a lot of their training of like what they really do, at least keep something to themselves, a little secret to themselves. This is the betting strategy that I've never really had a course on before. And this is very important because you guys have watched me trade for years. Why sometimes I put 5 contracts? Why sometimes 10? Why sometimes 1? Why sometimes micros? I have rules for all that. And we never really talked about it. And this is the Zoom calls are going to go over that. And we record those, and it's going to be a whole new course series. And in return, we're going to hire some new developers with the money we raise from it. And with that, they're going to build some more cool stuff. So we're trying to expand, and this is a nice little way to do like a little mini Kickstarter in the group. We appreciate you guys supporting us. You guys got to sign up for it. It's going to be the best. It's the best course I ever did. The last 2 days, people are saying that this is the most mind-blowing thing I've ever taught. And we're not even talking about our strategy, rocket scooter, nothing. It's all about the odds of the market. Like I framed a scenario where just by the amount at which you bet, you could close your eyes and randomly throw a dart at the market at random time and do a certain thing, and then you actually ultimately statistically become profitable. We went through all the case study for it. There's a thing that's consistent to a degree that has high odds, 70-80% of the time. Actually, there's like 4 things that have high odds. We went over one thing that's 60%. We went over one thing that's 80%. We went over one thing that happens another 80%. I mean, it's crazy. So there are things that happen consistently. And so basically you can bet that that's likely the case on the grander scale of things. So all it does is affect what you do in the market, how much you bet, at what times of the month you bet. And it's very important to know that. If you're trading all day, every day with the same tenacity at all days throughout the month, you're not taking into consideration the month itself, the end of the month, beginning of the month, expiration. There are things you're missing as a trader. There are tricks to trade around that stuff. And it's just wisdom. Been doing it for long enough to see what they are. How do I know we're looking at a 5-point range today? So we have hedge pressure here. Yellow line here. I'm betting that we just ultimately just push higher. That the market doesn't sell off really hard. That over like 2 or 3 or 4 days, we just push up this way. And then it comes down after we go higher. So higher before lower. Yeah, and res is positive, so I'm not too eager to like jump out of this. You guys may notice the YouTube, which was having like 150 or so people show up, is now down to 60 because most everybody's in Zoom right now. This is a huge hit in our community. We really love it. So, see, this is that hedge, that half gap push. With resilience being greater than 0, that's good. That's good for at least the move higher. A slower move higher, though. Betting small. I always buy small on hedge pressure taps. It's one of my. It's a strong move, but it's my confidence is always low. Believe it or not, it's a strong move, but my confidence is always low on hedge pressure taps to bet big. I always bet small on them. You guys may not have ever noticed that. So the weekly options are so volatile and fickle that while it is a really strong bounce point, I always bet small. There's those overnights here. Hmm. You want to see what? Let's see if I can turn. Yeah, I know what it's like when I actually trade and listen to music. Little different here. Let me. So when I trade, hold on. I'm gonna turn the music on for like half a couple seconds. Can I hear now? When I get to pick my own music, dude, I listen to good music. I listen to rock, listen to metal, I listen to like heavy stuff. I'm the guy at the gym that like I'm the only guy at the gym that doesn't listen to hip hop or like anything. Like I'm literally like working out to melodic death metal. I get so amped. You guys might not know, when I was in high school and college, I was in a metal band. I was a singer. I was like, in high school, I was captain of the math club, in academic decathlon. I was the actor at the school. I ran the school TV show. I did science club, computer science club, all AP classes. What else did I do? Broadcast journalism. I competed in math and programming and science. But I also had like long hair in my earlier part of high school. And I also sang in a metal band. Very relaxing music. I love Livewire. It's got great taste in music. I was the math club guy that sang in a metal band. Wow. Before I was like an old fucking guy. I probably could still do it. But I listen to everything, dude. Like last night, I was painting and listening to bossa nova jazz music. Like I listen to everything. I listen to everything. My musical tastes are weird. I'm like a music snob. But what I found out with like when I was in high school, like all my friends listen to metal. Metalheads have eclectic taste in music. They actually like everything. It's one of the few. It's like one of the interesting things that like most people I knew like hip hop just like hip hop. Most people I knew like country just like country. But most people I knew that like metal were like they love like everything. And they're like, oh yeah, I'm a huge fan of early 1900s jazz. And I'm like, really? Metal people listen to country. They listen to everything. Metal heads love music, and that's the whole interesting. Like my parents and other people's parents are just like, why do you listen to that junk? It's like, no, like metal's like a complex thing. It's like people like that have this like appreciation for all music. It was an interesting thing. All my skater friends would listen to like Nora Jones and stuff. Like it was like weird that how like you'd see big softies for music, right? So I listen to a little bit of everything. What do you guys like to listen to when you trade? Let's hear you guys tell me your favorite style of music. To me, it has to be something that has energy, something that has like speed. I hate like grooves when I'm trying to trade. I like to listen to grooves when I'm playing video games though. Because video games are always like action packed as it is. I don't need like action on top of action. So whenever I'm playing like Apex or playing like Call of Duty or something, Halo, I'm like chill music. Oh yeah, I can still see. I still have my guitar back there. I don't know if you can see with this in the way. Oh wait, let's move this out of the way. That is one of my guitars. There. It's an Ibanez Prestige. That was my gent guitar. Gent music. It's drop B tuning. Or not drop B, but B tuning. Looks like we're losing that hedge pressure today. Like I said, 5 points up or down is all I was looking for. So for my options trades, yeah, like right now I'm still doing the research on where I'm going to buy my options. I was up last night for like 2 hours, scanning the market and looking at options prices. So one thing about when you're shopping for options, there's an art form to it. And I guess I can cover this in the 20 days class thing. Most people who trade options are completely oblivious to how options work. When you buy options, it's like buying a house. If you're buying swing trading options, it's like buying a house. You need to do your comps. You need to research. If you just go in there and say, I think the S&P is going to hit 580 in like 2 weeks. Okay, I'll buy those. What? I'm shopping for options. I've got the ladder up. I've got the Greeks up. I've got the IV. I've got the gamma, the delta. I've got all the Greeks there. And I'm scanning. Where am I going to get a good value? Where in time? I'm like comparing price sheets. So I'm shopping for options right now. And I'm going to tell, like, that's the whole point. Whenever I decide to buy, I've got my eye on a couple areas of like when and where. And I'm watching them. Like right now I'm watching them as the Greeks are changing. Because I'm looking for a certain set of parameters that are favorable to the trade I want to make. I don't know if anybody else trades options this way, but when you look at the ladder and you look at the Greeks and you look at the actual price of the option, it's like buying a house. You have to do your comps. You have to look at all the options prices in the area and find the best one. There's no machine that trades options and or prices options. Options are pure supply and demand. Black-Scholes tries to give quotes for them, but the supply and demand is there. And I'm looking for supply and demand imbalances that are favorable to the trade that I want to make. So I'm actually shopping for my options right now. Somebody asked, am I doing at the money for calls? I would only do at the money for calls if I was certain on a high delta move. In environments like this, I'm not certain for a high delta move. This is going to be a slow moving market. I would buy at the money or closer to at the money as the market was falling, Joe, like 3 weeks ago. When I'm certain for a V-shaped bounce, it's going to move. When your delta can overcome your theta, then I'll buy at the money. Yeah. When you're at the money, because you know theta burn is the highest at the money. You know that, right? So if here's your strike and it's like right above it and you're just kind of floating there, you're losing a lot of theta, right? You need to get very far away from at the money. Like when you buy at the money, you need like within a day or two to be in the money and moving and continue to move. And typically when that delta stops flowing, the theta takes over, the closer to expiration, you tend to, like, my big 1200% trade that I made, like on the market dipped October 2022. I bought Apple calls, QQQ calls, Nvidia calls, and JP Morgan calls, and they all made a shit ton of money, like thousands of percent. The video I have on my YouTube is like 1200% on JP Morgan. I made like a case study video about it. Once it flies up and you make all that money and then it starts to hold and then like slowly start going up, you'll realize your profit's not going up. Any small gains in delta are going to lose in theta. So once that speed is gone, that's where you start to lose money or stop gaining money. In the Zoom call today, I'll detail what I'm looking for. When I want to get options on the move that I showed, that's like basically like 3 months worth of movement, I'm looking for longer term options. So when you're buying longer term options, they're very expensive. When they're very expensive, you need to shop. You need to watch the prices. They're less liquid, and you'll get a deal if you pay attention. And so like I'm watching to get a deal. I'm trying to get a deal on some puts. And that might sound eye-opening to some of you. I'm shopping for puts right now. I'm not buying anything. I'm shopping. I'm looking for the contingency case that we fill the gap, and then we start the leg down for 3 months. The better part about buying puts is you can be a little more, you can be a little quicker in your execution. You can buy closer to the money. Because as markets are falling and volatility is going up, the IV works in your favor if you're owning puts. I don't like that this market's just kind of like bouncing around here. This is like the second or third attempt at losing hedge pressure. If I don't get a move in like 2 or 3 minutes, I'm going to close out. So if we don't get back up here, I'll just take $300. Like I said, I'm going to keep this between $500 up or down. I always buy hedge pressure no matter what. My question is, do I just want to lose $500? But we hold this blue line, then we're pretty good. But yeah, believe it or not, I am shopping for puts in the short term. But I never execute puts when I think the market's going to sell. What I do is, well, I'll talk about it today. I don't think the market's going to crash. I think this is the strongest bull market we're ever going to see. I think that the market's going to do a lot to try to convince people that's not the case. Typically, like I say, big flash crashes like this, you can always say about 1 quarter out, you're back down to testing the lows or testing somewhere in the halfway point of the lows. So somewhere in here before it goes there. And then by the first of the year after the election, we're back up. You're still starting to see a little bit of this hanging out. So what I think is going to happen is that we might close out this month still up here. And then probably like immediately after expiration, it's going to slowly start to trade down. So somewhere in here, somewhere over here in time, I'm going to get right there. And that's as much as I'm going to tell you. And while it's up here, I'm going to start shopping for my calls. I'm going to be, okay, do I want to buy calls here, here, or here? Like when the market goes here, I'm going to buy calls. I'm going to tell you the strikes, but I'll do that. I'll talk about it in the Zoom call. What I do is I plan, like I draw these scribbles, right? I have like 5 different ways to trade it. So I'm like, if it goes up, I'll do this. If it goes down, I'll do this. If it does this, I'll do that. The hell is going on with the candles today? Market's being crazy. But this is one of those risky ideas where I know the market's going to go up. By the first of the year, we're breaking 6,000 easily on the S&P. Like we're going to ramp. We're going to just go straight up. January, February, it's going to be like a rocket. So I want to have enough money in between now and then gained from some of this chop. I'm going to play really with the mindset that we're going to be chopping and slowly trading up, slowly trading down. And that come January, February is where the acceleration comes. Maybe in December if it goes a little faster, but typically, you know, markets don't forget a crash. If you crash as much as you did, you always assume that it's going to take a second leg down. It's just a good rule of thumb if you've been trading long enough. You never assume you have a big crash and it V's back up without stopping. COVID might have been the one example of that. But COVID still had like waves on the way up. Like I think in September, October, November, before the election, COVID still did the same thing. Like here. Like markets like crashes, never forget. They try to trade down a second time. And wherever they trade down somewhere and then they continue to go. So the question is, how far down? What is that somewhere? That's what you, as a trader, you're always like, where's that somewhere, right? So typically, like when the market just collapses out on some kind of event, you tend to retrace and then attempt to sell again. So the question is, how much do you retrace? How much do you sell off? So there is a wave down somewhere coming in the next 2 or 3 months. And in it, I'm betting that we have a massive breakout. So, and all crashes tend to behave the same way. Like just random, this is like what we're dealing with. This is very common to what we're dealing with right now. Here's an example. Big collapse, and then it tries to do it some more. This is back in 2015 or 2014. When markets rapidly move like they did, they tend to not forget, and they try a second time. Rapidly move, try a second time. Very rarely do you V up and then keep going. Here's another one, V back up, and then you retrace some of it. So I'm aiming for my big calls to be somewhere in there at some point. So the question is, how much do we overshoot before we pull back down? Ideally, my best long is from here. I bet that the gap doesn't fill in the first wave. But the question is, how far do we overshoot before we come down? Nvidia earnings or things are going to tell us that. If we pop very quick on Nvidia, then it's going to reverse very quickly. But anyways, that's what I'm looking at. Choppy, boring day. As you see, appropriately so, I just put in one contract. Not taking big risk. This is such an easy day to see. Right or wrong, it doesn't matter. It's just a choppy market. I'm going to either get my 10 points or I'm going to lose my 10 points and be whatever with it. I'm still favoring to the long side for now. I think the market's going to go higher for lower because there's not that much volatility right now. When there's not a lot of volatility, the market just crawls a little higher. The resilience number is trying to fight to be above 0, and I usually try to bet that it ultimately tries to rescue itself. And without volatility or any selling pressure, that the market's going to have a hard time selling. I'm gonna mock something up real quick. Hmm. Boring ass market, right? It's taking many steps to try to lose this support level here. It's still pressing against this yellow line. This is our 56.41 is the illiquidity pivot. Boring ass day. I'm still on the long side. Things are looking good. Resilience is still negative, so I'm not super excited about this. But as you guys see, trading is all about control. That's basically it. This market's waiting for some Nvidia. But whenever you see the market, like, when you see this kind of like U-shaped move like this is very rarely something that does that. This is ultimately something that does this more often than it doesn't. So that's why I'm still hanging on. Hmm. Boring market is very boring today. It's a boring ass market today. Boring day, I know. So yesterday's class was pretty cool. We talked about position sizing tricks on why 20 days is important. If you can survive 20 days in the market, then technically you should be able to survive all days in the market. Like if you can trade 20 straight days and you can survive with half of your account still intact, then you have what it takes to become profitable at some point in the future. The only thing that needs to change is you and your betting strategy. So, like I said, if you can randomly play the market with the stupidest strategy ever and walk away at the end of 20 trading days with at least half your account in your pocket, then your strategy works. I mean, all strategies technically work to some degree. How you bet is the failure point of most strategies, though. Most people don't bet right. And that's why most people don't win in the stock market. Most of you try to predict the market's direction as part of your trading strategy, and I subscribe to the idea that the market's random. I don't try to pick the direction. I have to pick a side, but I'm not trying to guess the direction. I'm just playing the odds. And the way that it gets there is pretty random. Look, the odds of this is chopping all over the place. It's the odds are very low that it's going to go straight there. But I knew that. So I only put one contract on the table. And I said at the start of the day, I'll be up or down $500. Didn't I say that? That's how trading really is from the pros, the people that do this for a living. It's how you bet. The secret is how you bet. It's how much you bet, when you bet, what do you do if it's going against you? Do you double down? Do you cut your loss? Like, there's strategies to that, and that's really the trick. And if you do something and in 20 days you lost more than half your account, that thing you're doing doesn't work. That is really... And Q looks a little more fun. It does. It's really a strategy. Like deciding point. If what you're doing... Let me write this down. What's today? Okay. So if you, like I said, if you can last 20 days trading, 20 days, which is a month of trading, and you have at least half your account left, which is hopefully most people, if not all people, then your strategy works. The only thing that needs to change is you. How you bet is the problem. If you lose more than half your account by just playing some strategy, then your strategy loses more than half the time usually. It's not a winning strategy. The statistics of stock market is that most strategies are winning strategies. But the failure point is how you bet, and how the traders utilize that strategy in their betting philosophy, which are two totally different things that kind of connect a little bit. But my strategy on where I trade up or down and when I get in has nothing to do with the amount at which I bet. The amount at which I bet, which is, am I in? Am I out? Am I double down? Am I stopping? It's like how I bet is really the secret to turning a strategy that's winning, or even if you're good enough, a strategy that's a losing strategy, into a profitable strategy. See, winning strategy does not mean profitable strategy. This is two totally separate things. A winning strategy is something that can pick the direction of the stock market more often than it doesn't, which is rare. But most strategies at least are 50-50, maybe somewhat better. I mean, because everyone kind of operates on the same signals. So you can say most strategies maybe 50% or a little higher win rate. Problem is, why are you not super profitable? And look, there's the $500. And I'm like, okay, should I call it? I just said I'd be up or down $500. I want to play this kind of choppy range today. I'm in no hurry to cut it, but I played small, right? Because I knew this was possibly going to happen. Goes hand in hand with what I'm trying to say right now. a winning strategy not necessarily is a profitable strategy. Profitability comes from how you behave in that strategy. Can you notice when the strategy has moments where your confidence is lower, so you bet smaller? Moments where your point of no return has been triggered, so you get out. Points where the market dips to like a second entry point, you double down. That second part is how you turn any strategy into a profitable strategy. Even bad strategies you can turn into profitable, because you can, any good trader can analyze risk very well and just bet in a bad strategy and isolate the parts of it that are good and get out of the parts of it that are bad. So let me go ahead and say, I don't like this move. It was sharp and sudden. So sharp and sudden moves without a catalyst, 9:45 in the morning. A lot of times I try to take a second trade on that, but I don't think today I'm going to do that. I'm just going to hold on and let it play out. $5.25 I'll probably stop though. Let me double check NASDAQ to see if I don't have a pivot to trade off of on proxy. DD ban. Oh, yep, there it is. Should I? We do have another pivot on DD. Should I take a second stab at it? NASDAQ loves breaking DD when it does. I promise you guys, whenever you start to kind of really put your nose to the grindstone and trying to improve your game, you're going to want to know that how you bet is really the key to making money as a trader. It's not, you're not going to go out there and find somebody's tool set or algorithm, whatever, that's going to start making you a better trader. You still bet like a novice. You're going to not do well in general. So what we try to teach you, this like 20 days program, is to teach you how you're supposed to bet. And like at different times of the month, you bet differently. Different conditions of the VIX, you bet differently. And there's actual numbers. There's like equations I give you. We shared a spreadsheet with everybody yesterday that showcases like how you bet. That's a big part of it. Let me pull up my QQQ really quick. I'm still checking my options prices. Here's my gap fills. Expiration? No. I did want to see a down day like this today, though. Kill out those premiums. When do I think we're going to fill the gap? 2 months out? I even went. Test the high, maybe 490. I'm just getting the options ladders right now. We should Nvidia really quick. And that's just like the Nasdaq and everything just looks just like Nvidia, right? I think Nvidia is like the telltale sign of what the market's going to do. I think doing anything today is a coin flip. Now the problem is if Nvidia pops really hard, then it just kicks the rally and kicks everybody's butt, and then the rally kick starts. The problem is that the right way to bet is to bet bullish for the long haul, but the window of monthly options, I don't think I have a window right now to just take a, unless I get leaves. Yeah, I'm gonna go that. I don't know if I want to buy all the way to January's though. That's gonna be very expensive. So by the way, nobody buy, if you're trading options, don't ever buy an options contract for a stock that has earnings like the day of. Never do that. Never go in there and buy puts or calls to bet on the direction. You get crushed on the IV. If the option moves up or option moves down, it doesn't break the expected range. Both the puts and calls will just shrink in value as the IV crushes. You guys know that? So implied volatility is a part of the Black-Scholes model that adds kind of clairvoyance to you as the trader of kind of the interest in the variability of price in that thing. If that options, or I say if that underlying stock is possibly prone to make a really big move, usually around a news event, then the demand for options all over the place goes up. So the IV goes up, the implied volatility. Volatility, as we always talk about, is the thinness of the market or the spread outness of the market. And so when people are thinking Nvidia can move 3%, 2%, 1%, 5%, people's bets are all over the place. So the IV goes up. Problem with the IV going up is that if the market doesn't surpass that range that's expected, like Nvidia pops up or it drops really quick and doesn't break the expected ranges, then the demand for all those options completely shrink up because everybody bought their options already, and for the most part, they're stable there. But what happens if Nvidia blasts way below where basically most of the positions are? Then it tricks a bunch of people and they got to rush in and just scramble to buy the stuff. So that's what causes IV to, we call IV crush. But what happens is if you don't break that expected range, you don't get this flurry of people running in there and jumping in and buying additional options. People hedged right when they did, and then they turned out okay. Nvidia stayed within the expected range. When the demand completely dries up, then that volatility completely collapses. And so while IV is baked into the premium of both puts and calls side of the market, if you buy options, whether they're puts or calls, if it doesn't break the expected range, if you buy them the day of when the IV is already high, because that's the last minute shoppers, then even if you're right on the move, you're going to lose a lot of the trade, if not all of the trade, when the IV collapses. So when the IV collapses, the premiums just completely destroy themselves. So you have to be careful trying to bet on the direction of the stock market or the direction of a particular stock when there's a news event coming up. Earnings for stocks and CPI, Feds, whatever, for the index. So don't wake up Fed day, 8 o'clock in the morning and say, I'm going to buy some calls. Fed's going to break out. You might get lucky for like these your 0-day day trades flipping a coin, but in general, the smartest thing to do is to bet before that IV builds into the price and get the options cheaper. And the other side of the coin is when the IV is high, you want to sell options, right? To bet that it doesn't break the expected range. And if you sold puts way down here and sold calls up here and the market bounces within those range, boy, oh boy, you're going to collect that premium on the sell side. So people play like iron condors and credit spreads and stuff a lot just to capitalize on that IV collapse. The side of the option that you sell will put the money in your pocket if it doesn't break the expected range. But if it does break the expected range, the delta picks up and the gamma picks up into the options leg that you bought and starts to reward you to offset the loss you took on the option that you sold that was losing money. So spreads are pretty important to kind of mitigate some of that IV crush. If you buy like at the money puts right here, but then you sell puts outside of the range, like as a strategy, if the market just dips, right? Like you sell enough puts here to make it a credit. Like this is a cheaper put than this, but if this put was, you know, was a third as cheap, you sold 3 of those and you bought 1 of those. This is different than a normal vertical. This is a debit spread, if you may. You buy an expensive option. You sell a cheap one, it's a debit. But if you sell more of those at a different ratio, your exposure is higher, but you can also balance the cash on this thing. And so the thing actually dips and just holds like this, then you made all that money on the trade. And if it holds up in here, the delta and gamma is pretty high on that one too. So falling in between the range, you actually won both trades with this particular arrangement. If it breaks the expected range, well, this one mitigates some of your loss of that one. You can always close this one out. Problem with options is that you're not going to be able to exit the options position until tomorrow morning anyways. So it's a bad strategy to try to day trade with the options into earnings and hold overnight. But how much have I done out? Probably like $500. Not much. I'm right at the edge of where I wanted to be. I'm waiting to see if it holds DD band. I told myself right about 56.25 was going to be where I contemplated stopping out of the whole thing. This is right at the This is right at the 10-point stop limit, so it's right at the edge. I gave it a little bit extra room just to see if Nasdaq would bounce a DD band, but if it doesn't, it doesn't. But I said it's about really small just to account for that. If the market does collapse further, which is good, I'm shopping for my options right now, which is good. Nvidia's just kind of falling pretty quick. Okay, I'm gonna close it. I'll get back on the long side if we break DD band on the top side, but right here, I'll take the long if we do break. For now, I'm just getting out of the way. And that was a 50-50 shot. Like I said, it'd be up or down $5-ish, $100. No big. Put one contract, full control. And so this was an unusual move, not expected, but the confidence is, like I said, remember if you guys come from the Zoom call, I talk about hedge fisher bounces, I always bet small. And that's good because I do want to get my, if we do sell first now, I'm now looking at the call side of the market. Now I'm trying to debate. I was shopping for longer term puts. Right now I'm shopping for my shorter term calls. So get the leg up before the leg down. I'm trying to see what I want to do on this one. On the S&P. Yeah. That'd be my next spot too. Like if the S&P ends up here, oh yeah, I would retrace that every time. You're all in bull zone at this point. There's really nothing. Hedge fisher breaks always, trade small, but there's a retracement period here. So, well, I did buy to bet that we hold here. This yellow line resistance can be pretty heavy. Possible 20 more points to drop. That's why I got out of the way. And I'll try it again a second time. Remember, trading's all about control. You're going to lose a lot of trades. You're not going to win all of them. But, from start of day, I'm like, I'm going to lose $500, gain $500, somewhere in there. Lost 700. Pretty easy. That's a very small trade for me. Very small position, very small position size. Very small risk. You guys, my normal trading is between between like 1,000 and 10,000 up or down a day. So if I'm losing $500, that's like the small end of my risk. If I'm hitting it hard, you'll see 5 to 10K is pretty much my high limit that I go for. I don't really trade much bigger than that. But if I'm targeting like $1,000 or less, that's just like noise days. And I think it's good that I got out of the way because it dropped 5 more points, right? That's a pretty smart decision there. All right. Where am I going to get my calls? That's what I want to see. I'm trying to look at point in time where I'm actually going to aim for this. Am I still debating if I'm going to get the most delta on Qs? Because Qs have more to travel, but Qs also have more to lose. Nvidia shits the bed and we're down here. That's the ideal situation is I can always split my bet. And I did this for Apple earnings. This was my trick. And I actually might do this today. And what I did over here, and actually I'll show you exactly what I did. And this was a very, 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 very good strategy. Hold on. Wait a minute. Here. Well, I even remember I had the monthly maps here in Apple. This is before we had monthly maps actually automated. So, it was here, I think. Hold on. Where was that? This is the call. call here. was it? Oh, that's right. That's right. That's right. What day was that? October 27. Because if you see back here, you see why I have all my monthly maps still drawn on my Thinkorswim? This is me planning out my big trade. And we used to all have to do these manually. Here. I'm trying to remember everything I did. I guess this is where I was looking to buy. Bull side was straight. Things were good. I think I remember buying somewhere in here and then buying some more down in here. I'm trying to think of the days. 11-4, 11-1. I think that's it. I think 11-1, 11-4. Let me double check where. So I remember when Apple had its earnings, I bought, and then I bought more after like 3 days, if I can remember correctly. Which is here. Or maybe like 3 or 4 days. That's right. I thought I remember Apple earnings went down, so maybe that is what happened. Because I bought, and then like maybe a week later I bought some more. That's exactly what I did. It's here to here, yeah. So I got some like one of the very few times I'd buy into earnings, but I bought like months out. And then when it dipped and the IV crushed, my plan was basically this. I was going to exploit the IV crush to double down. So like I forgot where I bought. I think maybe 160s or something. So I bought slightly more expensive just to bet that we burped up and went, because the market was slated to turn around and rally. All the monthly maps are showing bullish. And I go, whatever, I'll pay the high premium because the delta is going to just rip. I mean, we're going to just completely roll. And the market like ultimately started trading down. And I think I got the puts for like a quarter of the normal value. Like I bought them here and I bought them for like 25% of what they normally were. And I got a really heavy position for whatever I did. And then once it went up to here, it was up thousands of percent. Because the majority of the calls were bought down here. So like I think I bought like 500 or 600 calls. I bought like 100, I think, going into earnings, and I bought like 400 or 500 more. And when it went up to there, there's thousands of percent gain on the second entry. The idea is that, yeah, I'm going to pay a little bit of a premium. What I told you earlier, you don't do. You don't like buy options and earnings. I think I got them like a day or two before, if I really remember correctly. I'll buy them the last day though. And when the market went the other way, I was still confident in the reversal, so I hit it harder. So, all right, guys, I'm gonna get out of here. Don't forget, sign up for the Zoom calls. 20 days. We're gonna have 20 different webinars. We're redoing all the courses, modernizing everything with betting strategy built into it. I want you guys all try it out. It's only $1 a day. We made it very inexpensive for a reason. We're doing a revenue drive so we can hire new people to make more cool stuff for y'all at Rocket Scooter. Everybody here, whether you're lifetime or a subscriber, please join those Zoom calls. The link, send me a DM in Discord for the link. I promise you will not regret it. People say this is the most mind-blowing thing that they've ever learned. I've seen comments in Discord that are just like, whatever. This is me really revealing how to bet in the market. This is the whole point of you trying to day trade, is how to bet. None of you are betting right. If you're not doing well, it's because your betting strategy sucks. It's not your trading strategy. It's not picking long or short. It's how you're applying your money. And you need somebody to mentor you through that if you're doing a bad job at that. Someone who's doing well is doing well because they manage their money well. That's it. That's the only way. The only way you do any kind of success in the stock market is you're managing your money well, managing your losses, managing your wins, betting the right amount, betting the right size, things like that. We're giving you all the numbers on how to do it. It's not subjective. It's like this is a spreadsheet. You do this here, 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 and here. We try to make it very easy to teach people. And like I said, you support us, we'll support you. We love you guys. Thanks for tuning in. We'll see y'all tomorrow. Discord.gg/rockscooter. Join us. We'll see y'all.